Hello and welcome. This is our group presentation for the course Portfolio Management, and I am Jon Lohtander.
Hello, my name is Ville Ristola.
Hello, my name is Nicola Weinberga.
And my name is Ilari Halko.
All right, so in our presentation, I'm going to cover first quickly the Finnish housing market as investment opportunity, and then later we move on to our risky and moderate portfolios. But let's begin with a little bit theory first. If you want to invest in housing market, you have to understand the factors affecting housing prices in the long run. So those factors include a number of households in the area where you are looking to purchase the housing, also real income of the households in the area, and other demographic factors, for example, age distribution. For example, if you are buying a house from area which has lots of old households, you might expect that the housing prices are going to deteriorate in some time in the future as the households are going to die and the demand might not answer to the surge in supply so fast. So this is a thing you have to consider. Like I said, in the short term, the housing prices are inflexible in the other way around too. So, for example, if there are surge in demand in some area in housing, the supply is fixed in the short term as it takes time to construct housing and so on. Also, the public sector can affect housing prices via regulation or rent controls or tax deductibility of mortgage margins. But those are maybe not so big concern here in Finland. I feel that the Finnish housing markets are quite deregulated or not that strangled. But in the context of Finland, other housing market here that the phenomena you have to identify is differentiation of Finnish housing markets. It has been around since the financial crisis of 2008, and it basically means that the housing prices are increasing in large cities inside the growth triangle, and it's so-called meaning for a triangle consisting Helsinki, Tampere, and Turku, and the areas between. And outside the growth triangle, the housing prices are deteriorating, and it means like areas in eastern Finland or northern Finland, excluding cities with universities or bigger cities and so on. However, if you are just looking to buy your own house and not to use it as a real estate investment and get somebody to rent it and so on, you shouldn't be too worried about the differentiation of the prices, as you have to think the house other investment also than just the increase in the value. So the housing generates your dividends in the form of consumption as you are living there. Yes. And here is the graph about the Finnish housing markets and the differentiation which I talked to you about. So as you can see, the year 2008 has been like a game changer, and since then the differentiation has begun. And here we can see just Helsinki metropolitan area and rest of the Finland. But if I would exclude like big cities from the rest of the Finland, the graph and the differentiation would be even higher. On basis of things I have said here in a few minutes, we identify two strategies for housing investments here in Finland. And these two strategies can also, of course, be mixed together. But the first one is so-called cash flow emphasize, where you buy apartments from remote or small municipalities with relatively cheap housing prices, for example, Tornio, Kotka, or Kouvola, and other municipalities here in Finland, where the house prices are slightly increasing, stagnating, or declining, but the rent profit might be as high as 11% per annum for your investment. So your payback period for the apartment you have bought is really short. And after that, all you get is just basically like dividends in form of rent profit. And it might be a little bit riskier than the value emphasis, as there might be difficulties to sell the apartments in the future, at least with profit, if you want to part from your holdings. The second strategy is value emphasis, where you can buy apartments inside the growth triangle. So you are expecting the housing prices to grow, but the rent profit is quite low. So your payback period is quite high or long, but you are better able to use leverage as the housing prices are higher. Risks in this strategy come mainly from potential housing price bubbles and other market price fluctuations, not from the differentiation of housing prices. All right, thank you.
Thank you, Ville. And next we can look at our moderate portfolio. So the objective of the portfolio is to win the inflation in long positions. And briefly about our benchmark. So our expected market return is 6.8%, 50-year average stock market return, if we look at the SP 500 adjusted for inflation. And as a risk-free rate, we chose 1.56%, which is the 10-year treasury rate in a US government-issued treasury securities. And the premium is the difference between them, so it's 5.24%. And about our stocks, so we strive to diversify in different sectors and some geographical diversification, Finland, USA, and Sweden. And the stocks are mainly from SP 500 and OMX Helsinki 25. And then we also diversified through investing in gold and 2 ETFs as well. But first, if we look at our stocks, so Kesko, its operating areas are grocery trade, construction and building services, and car trade. Good dividend capacity based on strong and steady ability to generate cash flow. Visa, it's a good long-term stock. Its stock position makes it hard to compete with, and it can provide security and stability to a balanced portfolio. Elisa, information and communication technology services in Finland and Estonia. The company operates within 2 business segments, customer and corporate, and has the potential to grow. Coca-Cola, good valuation and good option for our objectives, since quite stable, has room to rise at least to the pre-COVID level. Alphabet, expanding range of businesses besides Google and YouTube. Core earnings being so strong, stock provides stability and new businesses offer growth opportunities. Sampo, efficient and highly profitable operating units, has successfully chosen great investments. Fortum, major player in the field, good growth possibilities in solar and wind power through its gas assets. Adobe has impressive cash flow from creative software, leader in digital marketing software, and growth from document digitalization. And Spotify, quite new at the market, consistent growth, improving margins, international expansion possibilities, podcast, audiobook, live audio possibilities. To summarize, great ways to grow more. And it's also led by the CEO founder. And other assets are in our portfolio are gold and 2 ETFs. So briefly about why gold. Our portfolio's objective is to beat the inflation rate, and investment to gold is a good hedge against it. Gold has low correlation with other asset classes. Gold will always hold a value, seen as low-risk security asset, and offers insurance against other economic factors, like previously mentioned inflation and deflation, interest rates, stock market jitters, and currency problems. And currently, world's gold reserves lower than ever, and general demand in many countries higher. And then about our ETFs. So we chose BlackRock Eurobond and iShares 20+ year Treasury Bond ETF. Firstly, about BlackRock. So long horizon, actively managed. Its objective is to maximize the return on your investment by a combination of the fund's capital growth and return. At least 80% of its total assets in fixed income securities. These include bonds and money market instruments, and 70% of them are in euro area. may use financial derivatives to help achieve the fund's investment objective and/or to reduce the risk and investment costs of the fund's portfolio and to generate additional returns. And here's a small graph about its risk. So it's said to be risk 3 out of 7. So iShares 20+ year Treasury bond ETF, it's also long-term, and its objective seeks to track the investment results of an index composed of US Treasury bonds with remaining maturities greater than 20 years. Historically, when stock markets sell off, these bonds have experienced a flight to quality and increased in value. These bonds can serve as a portfolio hedge against risk-off periods. And the fund generally invests at least 90% of its assets in bonds of underlying index and at least 95% of its assets in US government bonds. And main risks are asset class, cybersecurity, income, interest rate, market, and passive investment risks. And there's a small graph about its past performance. And briefly about correlations. So as we can see, most of the instruments in our portfolio has quite low correlation from minus 0.25 to plus 0.25. But some of them, for example, the ones that are in S&P 500 have quite positive correlation between each other because they generally are mostly, I think, Alphabet and Adobe, for example, are both like in the technology sector. So they move into the same direction. But as we can see, the gold and our ETFs, they make it smaller, our average correlation. And our average correlation is 14.5.
Thank you, Nicola. And here we have the efficient frontier, which we use to calculate the weights for our portfolios. Our benchmark index was S&P 500, and there might be problems arising from that when we have securities from all over the world, as well as some bond ETFs. We used the Excel solver with some limits to calculate the weights. So we set the minimum limit to 3% and the maximum weight to 20%. And as I said, we used it as a reference because there might be problems with the benchmark. And we chose the minimum variance portfolio for our modest portfolio because there's less volatility and sufficient returns to beat the inflation. And here we have the weight for our modest portfolio and moderate portfolio, and over 50% of the portfolio is in gold and the 2 bond ETFs, which is good. We want low volatility and a good hedging against market risks. And we also have 12% in Elisa, which also has low volatility. And the expected return is about 3%, which is sufficient enough to beat inflation.
Thank you, and I will tell you something about our risky portfolio. In our risky portfolio, we wanted to make a portfolio which is well diversified by country and by sectors, and we also added cryptocurrencies in it. And we decided to choose the main ones, Bitcoin and Ethereum. In our portfolio, we only have long positions. It means that we do not have any negative weights in the portfolio, so we constrain them out. Short position might have been a good option for great short-term profit, but we thought that it would be too risky assets to our portfolio. And we also have cryptocurrencies, which is also a risky asset. Then adding short positions might add too much risk to our portfolio. At first, we chose the stocks by using our intuition and checked the data for stocks that we picked. And after that, we changed the stocks that we weren't happy with it. And here is the results about the stocks that we choose to add to our portfolio. As you can see, there is many assets from Finland and United States. And we also have many technology stocks in it. We added technology stocks because we believe that the technology stocks are good for rapid growth, for example, and Apple and Microsoft, they have a very loyal customer base already, and they have a huge resources if they for their new investments. So that's why we chose them in our portfolio, and because our portfolio must be well diversified, we wanted to pick technologies and other stocks from other countries also. Alibaba, for example, from China, Sony from Japan, Samsung from South Korea, and they also have a good loyal customer base, and they also have a asset for rapid growth. And do not to forget our own technology stock QT, that we believe that it has something to show us in the future. And here is some points that I mentioned already, but yes, the Kojamo stocks we added for as a Finnish housing market, that we believe that it would be a good stabilizer in our portfolio. And here is the distribution of the sectors that we picked, and you can see the technology stocks are in the main ones, and the next one is the automotive stocks. We believe that auto industry is so traditional, and they also have a very loyal customer base, and it would be a good stabilizer in the portfolio because we have so many assets in the technology stocks. So the automotive is a good stabilizer there, and we also have a good share of consumer goods. We added Pepsi, Nike to there, that they also are very global brands, and they also have a very loyal customer base. We believe that it would be good to our portfolio. And here is the country distribution. Some main ones are from Finland and from United States. From Finland because it's a well-known market here. The companies are familiar to us, and United States also kind of familiar to us, and they are also very developed markets. That's why the distribution looks like this, and also we have a big share from Japan, and the rest are equally distributed.
Thank you, Lari. Here we have the efficient frontier for our riskier portfolio, and again we had some problems with the benchmark, and the problems were even bigger when we have securities from all over the world, as well as cryptocurrencies in our portfolio. But we are aware of that, and we use this only as a reference. And we use the Excel solver with again with limits. We put the maximum limit to 15% to limit it even more when we have more stocks in the portfolio. And we chose the tangent portfolio to calculate the weights, and it had quite equal weights and sufficient returns. And here we have the weights for our risk portfolio. As you can see, there are the most weights are in large US companies, Microsoft, Pepsi and Apple, and Nike. And then we also have a large share in Toyota. And 18% of the stock weight is in Finnish stocks, and over 50% is in US stocks. So the weight on US grew a bit after this weighting. And we only have 6% in cryptocurrencies, and we see this as kind of a balanced portfolio.
And here is the weight by industry after using our optimization. The technology stock still leading in our portfolio, but consumer goods has passed to automotive stocks, and cryptocurrencies are in the 6%, which is more than the rest of the industry that we have. And let's see what happens, what kind of results we will get with this portfolio in the future. Thank you.